Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, April the 8th, 2024. I am going to, I actually went over the charts pretty closely, and I am reverting not back to a particular count. I am showing you, I'm running two together. One I'm calling alternate and the other one has been calling preferred. Preferred I kind of put out on the weekend. And here's what remains preferred, that I am counting a finishing move to what I believe is a larger degree B wave, and that what we've got coming up is a decline. Now, whether it's actually the finishing of a B wave or a third wave, they're both going to have the same type of a result that I'm now looking for, and that is a larger ABC down. And so no matter if you're thinking that we're only finishing a third, we still need a fourth down. I'm now saying we're finishing a primary B, we need a primary C wave down. And we're not going to the end of the world. We're only going back to 2022 levels. Just below 2022 levels, most likely. And that's going to be over a period of time. Plenty of things can happen in between. Now, how are we getting there? The market has been very difficult since January. So I'm going to go from actually the mid-February, the high, but it actually all began at the end of January of this year. And it has been, for the better part, sideways. And so it'll go up and it'll make a new high, and then it swings back down and it tests what is ending up being the boundary level for a triangle pattern. And it's a diagonal triangle within a minor fifth wave position. So it's finishing. Now, I moved it because I need to show you how it's now unfolding, and I put it up to, again, to with what today is doing. So I want to go, I've taken it all down so I can tell you what all of this is inside. If I get too much lettering and too much degree on it, it's going to get lost. So I'm going to go over this again, because what it does actually look like, and I'm presenting it now. So the argument is for that we still have one additional top, one additional high to make, but it doesn't change the a little bit longer out there, and that this is all finishing. We are brewing. We've got something that's going to come unraveled. Something is going to change, and really the gears are going to get clogged up by something. And then the natural result is that it's going to fall out of all of this. Because as you can see, we've been going sideways. We try to make a rally and it fits and starts. And this all is like, I'm not sure what you'd want to call it, but I'm now going to break it down Elliott wise. So what we got going on is that we have, this is a 5, 3, 5. That's an ABC up. It's wave one. And the diagonal begins. And it's a zigzag. So remember, in an expanding diagonal, waves 1, 3, and 5 present us with three waves, counted 5, 3, 5, zigzag, not flat, they're zigzag. And so here we have wave one. Then we have an A wave down, that's an A, and it's impulsive, so it's 5 waves. Then we have 3, and that's the B wave, so it's A, B, and then we have another 5, and that's a C, and that's wave 2, A, B, C. Then we begin wave 3, which again should form an A, B, and a C. And this is the only part I need to change a little bit, because that should be the C wave. And so let me go up and quickly change that. Not that. Edit. And that's actually a C wave. So we go up in an A, B, C, and I'll fill that back in, and that's wave 3. And it's not the shortest. Then we get another A, B, and a C for wave A of 4. And then an ABC, dramatic, really fast, great move, produces a slight new high. It's a B wave of 4. And then this is very complex, but it is a WXY Z, and it's WX, this is a Y, and this is the Z. And I guess that's how it's getting labeled, but in any case, it's an ABC, and it's 4. It's a 4. So this all fits. And if you want, you could push this a little bit. You could put the 3 over here and count, and this would then have to count more as a 5, but I've seen it and I did it. So, but I'm putting it here. I'm keeping this all very, very clean. So this has not been easy. It's been a difficult look. It's been a difficult count. It's been a difficult set of corrective patterns within a finishing impulse move. So it's been hard, but the end result is going to remain the same. Now, what about this? This is ending up being a one-off type of a deal. And in other words, the follow-through to that up to this point is kind of non-existent. So that makes it a one-off type of thing. And so, well, because I was looking for more. Either going to gap up and tell me this was definitively one-off, or was going to gap down as if to say, nope, we got another one. And you got nothing. This is what it did. Globex to today's close. Basically nothing. To affect either count, to affect whether is that it, C, here's where we put it all, the C and the B, and this is a 1, 2, 1, 2, it still could be, but it's not lining up correctly, to be honest with you, in my view, and after trading it today. So, and the end of this week, we start earnings with the bank, so a lot sitting out there, and they're going to move it around. Now, in the NASDAQ, 1, 2, 3, 4. 4 is complex. I'm telling you, I can move that 3, but I'm trying to keep this clean as an ABC. I'm putting a B there, I'm putting the C wave there, and this gets uglier, but it breaks all the way down. And WXYZ, whatever you want to call it, but that's still a 4. And this then launches in the start of a 5, which is going to be a zigzag up. And so we are in like a 1, 2, 3, 4, we get a 5, maybe it brings us up to here. We could put an A there if we need to. It falls back in 3 and goes back up in 5, ends up here. Now that again is going to the fibs 1 to 5. So wave 5 is equal to wave 1. And equality sits right there at 18,951. The trend line continues to hold. And even here, it would come in just below it, or it could maybe exceed this fib, go up, and then decide. I mean, it can come up this far and decide, we're hitting 19,000 or bust, and get there, and then, that's it. So again, this is a very near-term picture, and what I'm trying to just determine is, like, if you are trading, if you're a position trader, you're going to have to trade your position. You're going to have to make some adjustments, because I'm sure some of you probably have good, healthy premium positions on with a direction for the market to go down. And either if they're options, you roll them. If they're just paired off in other ways, you can trade it. So you make your adjustments as a trader. And again, I am an old market maker. So I've carried a lot of positions, and you traded them. You may have been a little bit early with your directional plays, but you're trading it. And so you're able to get in there and out, and you make the money, and you continue to move forward, and you're working positions. So let me just leave it that way. If you're a big enough options trader, if you're not, then maybe if you're just long, well, maybe you've got somebody else doing that for you, and you're putting it into ETFs, and that all works. If it works for you, that's great. But if you're a day trader, it's not as easy, but it was possible, and there was some really fun stuff, but it was a lot of chop, because in the NASDAQ today, we had some that we were really kind of getting still hit, Meta being one, Microsoft being the other, Netflix getting hit, NVIDIA basically staying down. So what was going up? It was Tesla and Apple, and then AMAT and Google. So, it depending on where the money was flowing today, and I guess it was Tesla's day. So there's about a bunch of cash being tossed back into Tesla. I think there was a lot of the options were trading, but no matter what, if we see that follow through, what else then? So tomorrow Tesla goes down, but they'll come back after NVIDIA. So what my other point is that the funds aren't done getting shifted around. And now that we're moving into earnings, for whatever the reason, I think this is the type of stuff we might see. But I think I kind of weigh this out, and if I had to give it a weighting, it's 50-50 again. So 50-50 that it's done, in which case, if it is, I'm going to put it out again, we begin to fall, because if it's done and I got to move this all back and that's the end, then it's a 1-2, 1-2, no more going up. It starts to hit the skids again, a la what we just did last Thursday. That's what I would think. That's what I think would come if this is done. Now, cycle-wise, it is turned negative, mildly, not heavy duty, but it's no longer, okay, we should have this translation of market's going to go up. It's continued to hold the uptrend. That's beginning to decay. That's beginning to falter. There might be one more, but I'm not looking like this thing's breaking out and we're going to the moon and everything just keeps going, going, going. We might have one more. This is how this is all played out. And it might happen again. So what here's it here? That's the deal. Same deal as I left it with you on Saturday. We got a small gap up in Globex, small. And then that got reversed, and then we just played in a very tight range today, and it's consolidating. Are they waiting for CPI and PPI, which is Wednesday and Thursday, other things coming out, Fed minutes coming out, whatever the situation is that the market wants to decide to wait, they will. But we're going to get a lot of tossing around in between. So if we get the break and we break lower and we start to just begin to sell off and we break levels, which are given on an intraday basis. Here, unfortunately, it's 18,051. It's a 4-hour chart. But if you start to break below these lows, what is that low? 18,237. We start to break significantly. Well, you're going to go, because this is what it went up on. If it starts to break down, goes past the 618 level of this bar, well, you're looking like it's going to come down and start to retest these lows. If it breaks that low, then we've got additional lines coming underneath. And it should, again, free flow. So also, if it's going to go in that direction, I suspect that it will get a lot of push from something that has happened or going to happen within a geopolitical, or if it's within the market, but something is going to shake it, and shake it loose to actually drop. That's my opinion. Now, going up, we've got earnings. So if this is just chugging along and we don't get any other major things from outside the sphere, well, then yes, the market is likely to move higher, and it could do it pretty quickly. And again, what we're looking for there is actually a gap. Right? Because what I'm saying is, here's 1, 2, 3, 4, gap. Finish this first run up. It's a gap. And either that or we're inside 3 and it should gap and go and get us back above 18,700. And that's going to open the door for that. All right, over in the S&P, it really is the same story, but I'm going to do the same story, and I'm going to walk you through this. Because here it's not pretty, but I'm going to give you the Elliott without all the labels on it, because I want to make sure you see the structures. So it is not a diagonal triangle, in my opinion, here in the S&P 500. So beginning with the end of minor wave 4, which was back in February of this year, February the 13th, 2024, we started on a minor 5th wave up. So we're basically into it going on, 2 months. And so what we have is 1, 2, 3, 4, 5, straight 5 up, wave 1. And absolutely not, it did not overlap. It got close, but it did not. So it stays a clean 5 on a lower degree. Then we got a 2. And this is then 1. So 1, 2, 3, 4, 5, 1. A, B, C, 2. Let me do that again. 1, 2, 3, 4, 5. 1 of 3. A, B, C, 2 of 3. 3 of 3. 4 of 3. 5 up. 5 of 3. Then I get an A, B, C, 4. And again, everything gets pushed away. Now, if that's being the case, we'll add the fib for it there to there. And yep, it did. It did overlap, and I'm telling you, it's almost like you have to. To put it down here, it just doesn't fit as well. I'm leaving it there, and I see exactly what it's done. Trust me, I have. And I'm going back to imagine what RN Elliott sitting with the same thing is looking at this and going like, well, you know, I think it needs to go up, but that then broke. So then what was that? And I say, well, you know, how much did it break by? This high is 52, 51.99, and this is 91. So it's 8 points, 8 points in the whole scheme of things. And I'm going to allow for the 8 points right now. Even if I go and I take this away, one more over, and show you, it's not quite as bad, right? In fact, it's much, much less. In any case, I am allowing for it under this particular view. And I feel that that is the view. If I try to put this into a triangle, it just really does not work. So again, 1, 2, 1, ABC, 2, 3, 4, 5 of 3, ABC, 4, and we're in the 5. That being the case, here's the marker. 100%, where wave 5 would be equal to wave 1 comes in at 54, 12, 13, 54, 13, 15, 10, 25, all in the hood. You have to allow plus or minus, it is finishing something pretty big. So again, trigger, it goes better. You know, you got 1.618, but 55, there have been a lot of calls for a long time that 55 was a ticket, 55 is a ticket. It's always been there. It's always been there. Doesn't have to, but it could. Now, the other point is that this has not changed. Again, like was saying in the NASDAQ, this has not changed whether or not this larger degree, minor degree at 5-wave advance is completing, and then that on top is then completing an intermediate degree 5 waves, which is coming in the form of a C wave, and on top of that is finishing a primary B wave. And which suggests that we are going to go down in a C wave, which is 5 waves. I've already gone into the detail on that. That's still to come. That should still happen. But it does, we're leaving open that, okay, we might go up 200 points, 150 more points to finish this all off. Again, if you're trading and you're a position trader and you're putting on options positions, or you're just putting on trades in preparation for a turn in the market, then trade it. And I'm sorry to maybe sound that way, but this is where, as traders, we make decisions and we keep positions and we alter positions and we work them. We work them because the outcome, I believe, will be the same. We're looking for a correction. I want to play the correction. And so a lot of it is actually just trading. Okay, so for tomorrow in the S&P, well, we're waiting for the resolution. And that resolution, I'm going to go straight down here, guys. That resolution really is not coming. Here we have, this is Thursday. This is overnight. Here's today. Right? Overnight. And then we open. And the first thing we do is we go grab for the gold. So, you know, and then sideways. Sideways. So that's neither. It's not bearish. It's corrective. It's consolidating. So those that believe it still needs to go up, okay, they're okay. They'll buy it here and they'll hold it, or the options are here. So I think at the same time, what we're also seeing is developing options as to where, you know, we got to keep an eye on where they're putting the put wall and the call wall, because those come into play. In terms of this index, they definitely come into play, and they're important to know. So, yeah, kind of thinking going back to options. Now, I'm still looking for the resolve to this. So again, it gaps up or it gaps down. It either breaks 51.91, it's going to give us a stronger signal. Hey, we're going down. And that whole thing being done wherever I had finished it above all this, 52, 53.33. So this all coming off, 1, 2, 1, 2 is like coming down. And it should come down a la this, but even a little bit stronger, because this would not be a 4. This would be a 1. This would be a 2. And we're looking for a third. So that would be on a break. If it goes up and it breaks above 53.09, we're likely heading in the opposite, and this is all done. So again, back out at least to that hourly. If this would be all done, right? Get that 4, 1, ding, 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 2-ish, into here somehow. But that means we hold. We don't really start to break below these levels. We hold, and then we start to rally again. But it should kind of come down and give it a test, and then kind of pop, like, and that's kind of like 1, 2 maybe. These are ugly. These are difficult, even on the hourly. So to be positive, it's like it either breaks, it goes up and shoots down and breaks on that direction, it's kind of triangular. But this gets left as a 1, 2, and this, not sure. But I would think, a lot of consolidation, it would break out of one way or the other. If we break up, then I'm looking that they're going to go take this out and start heading above that. Now, whether they do that tomorrow, I don't know. I don't think so. I think we got another day where we could do a lot of consolidating and do a whole bunch of nothing. All right, I am going to finish it there, because here we have moving averages. It's the 1 hour moving average. Look at that 200, flat as a pancake, and that's from last Friday. Flat, flat, flat all weekend, all today. Do you wonder why we were doing this? There you go. And then here we have the same deal. All of them. 13, 20, 50, 200, flat, flat, flat. And that tells you pretty much what today was like. All right, that's it for today. Next update. Well, first, let me just double check. Tomorrow is Tuesday. What do we got coming out on Tuesday in terms of economic data? Oh, wow. We've got the NFIB Optimism Index, and that is it. And guess what? All the Fed people have the day off. And then on Wednesday, CPI. CPI, a couple of gobs, and wholesale inventories. Next update, Tuesday, April the 9th.